The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 18th day of July. My pleasure to be here. Ooh, 18th of July. Yesterday at this time when I said 17th, I said, oh my goodness, could be a family member's birthday that I forgot. And I did forget, and now I think the 18th is the day. Oh boy. And it is 12-hour, 14-hour difference. The wrong way. Oh, well, I'll have to work it out. Dow is up 82 at 25,201. S&P is up 6.5 at 2816. Comp index is down 1 at 7854. This is going to be very interesting. The E-mini is up 6.50, up 0.23%. The Dow is up 0.33%. Divergence there. We're looking at a couple of Dow stocks that are really doing well. I'll talk about that. United Technologies, as I mentioned, something real long is doing really nicely. Just a couple of leadership stocks here. Okay. Leg C in the E-mini. Leg C in the daily Dow as well. This suggests there cannot be a top based on the Chapman wave methodology until we make a peak C, which means whatever the high is today, there has to be a lower high tomorrow for the peak to be made. And then Friday would be the earliest you get leg D. So the earliest you could get a peak D would be Monday. So thus far, excellent action. Technicals are very strong on the daily chart of the E-mini, very strong in the weekly, which is in leg D. And I said to subscribers to my opening call, I give a very detailed report every single morning. And I had said that there's a good chance that this particular trading range that we see are between 2816s and I had called it 2808s. That would be maintained until we break decisively above or below. We went below for a moment, spiked to the upside, and now we're above. We're in leg C in the 120-minute chart. That's important because it's saying that they should be, based on the Chapman wave methodology of attempting to get to a peak D, should be another leg to the upside coming up. All right, let's get to the nitty-gritties. The Dow extends leg C in a, I got to get rid of that right now. It's not appropriate. Just at this particular point, I can reintroduce it. But in the meantime, it's the cup formation that's really important. I believe we either are or we're within pennies of being stopped out of our short position right there the day after the peak D high. It was just terrible. I saw the turn at the trough D. I did not jump on board that Monday, 2 Mondays ago. I should have said, even if we're holding this, we can have a short position on the long side. It might last 3 days. It could last a little longer. I think it would last a few days. It hasn't. It's lasted a week and a half, almost 2 weeks. Leg C, and it should still go to a D because the MACD is expanding and the stochastic is at 98%. So what can I say? That was a mistake. Now, break even, or at least a little bit of a profit, is better than no profit at all, but we had a much bigger profit. We did take some off right near the bottom, so that's good. But it wasn't good that I didn't anticipate this would be a stronger leg to the upside, especially with the market rallying against perceived really, really bad news. If you listen to the press every minute of every day, gosh, got to stop listening to news, because if you listen to the news, you would be really depressed. Now, you've got a left side, right side price time action. I showed subscribers this morning. Well, I've been showing them all week, but this morning has this 25,402 high of the 11th of June. That's the target. It doesn't have to hit that, but it does say all the technicals are positive. The MACD is really strong. Stochastics now at 98%. I've been talking about it since it was at 23%. This is a remarkable rally. And green candles, just look at those green candles. So I cannot deny it. Very strong move. In leg C, let's get out of this. I'll show you something even more interesting. That makes support right now at 25,070 to 25,020. Well, let's call it 25,000. Really important, but we should be going higher before there's a much bigger dip to the downside. And then in D, I'll start to get a little cautious. SPX. SPX trading right now up 6.59 at 28.16.13 in a leg D. It's one letter ahead of the Dow, but this is still very good action in leg D. That weekly chart has broken the left side resistance back at the 2801 area from the 16th of March. We're at 2816. Leg D. Just, I cannot help but say at this particular point, there's a chance that you've got the IWM making all-time high, then it's pulled back. You've got the Qs making all-time high, hasn't yet pulled back. So maybe you're going to get the S&P to be next, and maybe the Dow has to follow. I don't know. But this pattern here in a rectangle formation in the monthly chart says that usually there's a rally in a shorter-term time frame, in this case the weekly chart, that should go to a D very close to, just on or just above the previous high. This is the bigger rectangle formation. This is one that would be like this right here. And then there could be a much deeper pullback. I don't know. We'll just keep checking it out. Key support is at 2802 to 2797. All right, QQQ, here we go. QQQ made an all-time high yesterday. Hasn't taken out the 180.65 high yet. And a couple of things going on. Leg D in the weekly chart at all-time highs. Leg E in the monthly chart, all-time highs. 120-minute chart at a big peak, a peak A pullback. We'll see if there's going to be a give back here in that single leg A. But in the meantime, look at Amazon. Amazon had a round number today, 1848 round number open, went to 1858.88 and is trading at 1840.90. A close on a daily basis above 1848.00 would say, yep, you can go a little higher. In the meantime, we're watching it real closely because it's going to be a big clue for us. The last time it made that round number at 1760, round number high on the 2nd of June at 1763.10 high, peak E, dropped quite sharply to 1646 on the 25th of June before turning up. Let's go to the IWM. IWM showed a little bit of strength yesterday when the others were faltering. The Qs are faltering a little bit. Now the IWM is up 6 cents at 167.58, stuck in a range. We're not going to go back to our short position, although if we kept that as a short position on the IWM instead of the TZA, we would still be short because that would have been the stop. 170.20 was the all-time high. We shorted within pennies of that, and but we use the TZA that gets washed out every evening. It gets recalculated, so there's a slippage there. So we did get stopped. That will be made nice money. We were out for this big rally to the upside. I'll go to gold as we go to the break, as we usually do. Gold is down 1 at 1226.3. Candle forming here is going to be very important, but it is a very sharp leg E to the downside in the weekly chart. You can have a bounce, but this doesn't really look good at this time. I'll talk about the dollar, the euro, and the yen when I get
Today,
back.
it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
So you see these arches in the gold contract. Wow, look at that. So many. Lowercase h, failure pattern. So what we're looking at is that gold metal low, 1220.90. Look at this weekly chart. There has not been a peak since it made this little peak A- right here, the week of the 15th of June at 1313.0. That lowercase h failure has seen lower lows every single week and lower highs almost every single week. One little sad little spike to the upside, but otherwise lower red candles mostly. And you're under key support in the monthly chart. That is really not good. So yes, I see some kind of a bounce, but have a look at this. EUR-USD, euro-dollar currency pair. Trading right now down 0.0009 at 1.165. Trying to rally, coming off the low, but still down. Weekly chart, chop, 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 trying to make this whole 1.16-ish area to 1.15 area key support. It's really struggling. The technicals are trying to rally in the weekly chart, not very successfully. If you look at the USD JPY dollar yen currency pair, leg C in the weekly chart, very strong technicals. Leg B, a new leg B in the weekly chart, monthly chart. But you remember what I said, a major downtrend line. I remember hearing someone once talking about this trend line and saying, oh, it's above it, that is it, that's the breakout. And I always say, wait, that's a breakout. It isn't the breakout. You've really got to see some other things. You've got to see a test of the downtrend line. There's a lot going on here. It is impressive that you've gone from the peak that was made back in June-ish of 2015 up in the 125s in the dollar yen currency pair. I've seen 1, 2, 3, 4, 5, 6. I'm not going to say 7, 6 over there, and 7 has just broken out. 6 tests of that trend line, and now it's broken out. Month isn't even half. Well, it's almost half. It was half over, right? So this is very important. Why? Because the MACD is trying to turn up in the monthly chart. The stochastics at 47% and running strongly, but not great at 80%. It's at 47%. This is the start. If there is a pullback in August, regardless of where it goes to in July, and it comes back to the 110, 109 area, that's a failure pattern. So this is the start. That's the way you've got to think of it. it is like peekaboo. Winter hibernation is over, and just sneaking your head out. You haven't yet got enough food to really get energized to go out into the woods, but the little bear is gone. Oops, winter might be over, okay? But the weekly chart is saying, hey, this is very nice. The daily chart has gone to an F/B, and the stochastics at 88%, and the MACD is still rallying strongly. This is very good action, right? Could pull back a little bit, but 112.78 right now. You've got 112 to 111 and a half as really good support. And wait a minute, if you go to the dollar's given back a little bit of the gains from this morning. It's at 95.16, up 21 cents. Gray leg B, I've got the cup formation now. It tried to test that lower 93s. It went to 93.70. Now it's at that low of 93.70 something. Held beautifully. The MACD started to turn up, stochastics turning up. If it crosses positively, there could be further gains in the dollar. So the dollar, the weekly chart is superb. Monthly chart, just like the USD JPY. Yep, big breakout. Look what happened. You've got tests on the downside of the 9-period moving average in the monthly. That's the pink line. And the black line is the 14-period moving average. And the monthly is trying to cross positive. It isn't yet. Minus 0.49 on the 0% line of the MACD. This is just the start of a move, or it's going to fail based on the monthly chart. So far, holding really well. All right, next thing we want to do is crude oil. Crude oil right now is up, down, up 29 cents, trying to turn up after a really sharp move from the 74s down to the 66s. I would say that is 8 points. That's a big move to the downside. Peak E in the weekly chart, trying to test the 200-period moving average. It's going to keep coming to the 66s as this magnet of the 200-period moving average is trying to regenerate energy to give it as a trampoline trampoline cushion and a springboard to keep moving to the upside. If it goes to the 65s, it's very negative. So far, this is good action, but it is peak E with a doji candle 3 weeks ago, and leg D starting to fail in the monthly, but the technicals are still very good. So crude oil, the range, I still say between 71.5, 72, and 65s is absolutely imperative that either break on one of the sides will be positive or negative. All right, let's go look at this TLT. TLT right now is down 19 cents at 121.79. Range bound, rates are just range bound. I suspect 121.50s is the 200-period moving average daily support on the TLT, Lehman 20-year Treasury bond ETF. And then the weekly says, wow, what resistance. It was support and now it's tremendous resistance at 122.36. It has to power above that to 123.80 to maybe 124.22, somewhere around there. And then I think you've got something different in the TLT. Well, I covered everything. Now, a couple of things. So for subscribers, this is what we've got. We've got the UTX. We still have a long position. Did not add to the long position. I should have, but they're very quick. Peak A, peak B. And then I say this is a very good example of the Chapman wave restart. When it succeeds, it can go to a D. So that was really silly. I said that and I never jumped on board. Why? Because it just kept straight up. It never really had a pullback after the big break. But this is good because it's a good sign for UTX, a key Dow component for me, to be working its way higher like this. Very nice. So we're in the 119s, took profits on the way up, but we have a small position left over, and it's at 132.51 right now. Really nice. I'd mention what we've got because this is what I want to do. This is our advertising medium. This is where we tell you what we've done, not what we're thinking, not what other people think we're doing, what we're really doing. And we've got the IBB long, and that IBB long from the 110s, and it's trading now at 118 at peak B. I believe this is peak B. It should go to a C and a D within the next 3 to 5 days. Key support in the 116 to 115.50 area. Let's see what else. I said that, so I said we'd look at the semiconductors, the SMHs, trading at 106.75. We've been short from right there, just off the top, via the SOXS. We took very nice profits, but we did add to the short position on the SMH yesterday with a really like a 1% a very tight stop. We'll see if we're going to get stopped out or not. This is a really important moment because the SMHs, the semiconductor, lead on the way up, the way down for quite a few years. Let's see what happens here. Applied Materials had a really good spike, and now it's pulling back. LRCX, what is that? Lam Research had a big spike. Has it pulled? Yep, it's also pulling back a little bit. If these key semiconductor stocks actually start to rally strongly, you could have a rotation as some other parts of the market start to pull back, and you could suddenly have a decent bounce in the semiconductor industry. So we're going to handle this really very carefully. A couple of other things. Of course, we're long the dollar from 90, and the dollar right now is at 95.15. Long-term position from April. I'll be right back. Dow's up 89, S&P is up 6. We'll be right back after these important messages.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. What was I looking at before the break? Let me just double check. XLF. So, no, before the break, was I looking at the XLF? Yeah, I was looking at the dollar now. So, within the context of my opening call newsletter, a couple of questions came in, and I'll just go to them right now. We had Bank of America this time last week. On Friday, put in a stop. I kind of tightened the stop. Only remember I was talking to, I can't remember who called, who was looking at Citibank, and I said, I just can't tell you right now whether we're going to get a good rally or whether there's one more pullback before later in the summer we start a big move to the upside. Well, we just got stopped out, very tiny loss on Bank of America. And look at this. XLF is trading up 45 cents at 27.93. Big move to the upside. It hasn't broken this trend line yet in the weekly chart, but it looks like it wants to. This could be part of the rotation. I'm anticipating if we get some kind of a sell-off next week. And look at Bank of America. Oh, hurts me. Look at this. We were in the 20. Can't remember right now. 28.98. I think it was. Yeah, 20. I think 28.99. Yeah, 28.99. And it's trading right now at 30.22 and a huge leg beat to the upside. And this has broken that downtrend line. I like what I'm seeing here. I don't know whether this is short-lived or not, because the MACD and stochastic in the weekly chart have turned up, haven't really crossed positive yet. But this says to me that there's a chance that the financials are going to be coming on strong in this particular period, and we could be seeing a rotation as some of the leading areas really pull back quite a bit more. And that's going to be very important. So I had a question here. Paul says, can you please look at FAS? FAS is the financial bull. Well, this is the XLF, and it is the 3 times long. Wait, what does he say? Can you please look at FAS? I entered on the 9 EMA pullback. Whoa, at 66, trading at 70.42. Paul, brilliant. Do you think this can keep going to the swing point of 75? I don't like to go to the upside action until I see that it's taken out the left side, the first left side key resistance, and that would be 70.88, and the high today is 70.62. This is leg C. I'm going to recommend to you, because you've got the 3 times long, that yes, you hold this. Don't get too carried away in the sense that you're just going to hold it to a particular number. Do it by stages. And what I'm going to say to you is in leg C, if it has a pullback tomorrow maybe and makes a peak C with no new high tomorrow, I would think from this move up in the MACD at 91, MACD is strong, the stochastic at 91%, I would think that a D is easily possible. I should say a D is possible. I don't know about easy, but it should be possible. What I'm going to say to you, after it pulls back, if there is a leg going to the upside that goes 1 penny above whatever peak C is in the next day or so, raise your stop, because you've got a 300% long position. For money management purposes, even though that'll really improve the weekly, because I think that the MACD is going to cross positive on the weekly chart, I'm going to suggest to you, Paul, that you take 1/3 position. You either take something off immediately as it breaks to that leg D, or you make a stop of maybe 1.25, a trading stop, and just keep it knowing that you're going to lose 1 position out of the 300%. It'll be 100% position. So that's what I'm looking at here. 1/3 comes off in this particular move. Just for money management, I'm beginning to think, based on the move, let's see Goldman Sachs, because I had a question about Goldman. Goldman lags, it's not doing well, it's up 1. Goldman is not the issue. I picked Bank of America. It was so stupid. Probably should have just added to it, but I really wasn't sure in this environment whether with the rates holding at the higher level and not really pulling back, whether that kind of third quarter profit or second quarter profit would be in the cards for them. That was my only thinking. Silly, we got stopped out. Would have been another one of those big winners. Very nice winner. Don't have it. So I'm just going to say to you, Paul, congratulations. Really good move. A good eye. And all I'm going to say is, within the context of what we're looking at right now, just use a little money management. That's all. Big deal. So you have 2/3 instead of 3/3, and it goes even higher. One part of it has to have some money management, at least at this point. CX was a question. Tim wants to know CX. Let's look at CX. Haven't looked at it for a while. Ooh, haven't heard from Scott. CX, right? Oh, nice move up in CX. I haven't been looking at this for a little while, huh? Peak B in the weekly, turns around at a trough D in the monthly. Now, what's the question? Please, Basil, please look at CX and see if it looks like a good place to enter, and what can I expect on a short-term trade. Have the best of days, Tim. Tim, I'm going to suggest to you, because you're watching it really closely, at 6.78 right now, having kind of turned the corner, the MACD turned down, but still very good. Stochastic is not that great, but it's the weekly chart that's really improving a lot. I'm going to say, because you're watching this closely, at 6.78, I'm going to say start your position. Start your engines. On this, have a little wider stop than I would normally do. It's a $6, $7 stop. I'm just going to say for the next 2 days, make a stop at the entry price of 6.64. It's a little more than I would like, but have a 6.64 stop, at least on some part of your position. Start your position, and I'll follow it closely. I'm going to put it down here, CX with it. That's it. Okay. And I haven't done the waveform. I do believe that this is leg A, B, C, D, E. Made a peak E under the 200 period moving average. If CMEX SA, Mexican Cement Company, can break into the gap and actually close above the low of the 12th of 6.85, if it closes above there, that 200 period moving average at 7.11 is going to become a magnet. Good, nice eye. Bob wants to know about MS earnings. Did Morgan Stanley come out with earnings? Up 1.36 at 50.54 legs. Big gap up. That's what I wanted to say. Ooh, too many words. A big gap up, and is pulling back from that gap up, but it's still a gap up, helping the weekly. I don't think this is one of the better looking ones. I think Bank of America is actually a nicer one. You want to look at AXP as well. Oops, AXP over here. AXP. Yeah, very nice. A, B, leg C, just like the others. Leg C in the daily will go to a leg D in the weekly chart if it can go above 103.24, the high of the week of the 25th of May. This is nice. American Express. Look at MasterCard. MasterCard trying to go to the recent all-time high. Look at Visa. These card companies, I mean, this is all-time high right now. Leg C, all-time high. Very nice action in all of them. So yeah, I did those. IBKR, I don't know if the earnings came out yet. IBKR, which is Interactive Brokers Group, trading pops up. You know, I'm a little worried. I think that the brokers aren't yet ready. And that's the other reason now I can go to the question that I had. It was a statement, actually. And the statement was right here. So knowing you feel that confident about the Dow going to a leg D in the past week, why in the world do you not just exit your Dow short the past several days? You know, that's a psychological question. We'll have to get Mark Douglas's book. I'll explain why in a minute. I'll be right back. Basil Chapman, Target Technicians out. We'll also look at...
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Yes, just real quickly, I was asked about Disney. I was asked about Disney when it was at 100. I said, I really can't say because it's made this top at 108. It's pulling back sharply, but it's made a huge-shaped turn. This is a Chapman Wave Cup and Ladle breakout that always goes to a D, sometimes an E, then comes back and retests the lip, which is in the 109s. I like it. It's made a U-shaped pattern in the this cup formation in the weekly chart, and the same thing, a double U in the monthly, right in the Chapman Wave inside track repellent zone. I like it. I didn't think I'd like it. And I also said, I don't understand Disney. It's getting too complicated for me. But on a purely technical basis, I think it could test 113 to 114, maybe even just tag 115 in the next 3 to 4 sessions. And then I think it comes back and makes another cup formation with a test of the 109s to the 108s. But yes, it's acting very nicely. Congratulations. Now, next thing I want to look at is, so the answer is, I did say that we got a turn coming, and I didn't know whether it would be a longer up move, a greater move in price, but the fact that we got in at the previous peaks, both in the Dow and the IWM, exactly just the turnarounds, the semiconductor index, that said to me that we've got to follow this closely, because to get to the high that was made at 25,402 in the Dow, I wasn't sure that we would get there before we got to a D, and that it should fail. That was my thinking. So I was thinking we'd be able to hold that position because we shorted almost exactly at the top, except that we're using an inverse position, and that has shrinkage, and there's no way that you can get around it. So, yep, that's probably going to be hit and taken out. Now I have to get a new position, fresh thinking. And every day I could have said, just get out, let's go long. And I'm thinking for 3 days and then flip again. I'm trying not to. We do that enough with certain positions. I didn't want to do it here. That's my thinking. Wrong thinking. What can I say? We do the best we can. It cost us the gains that we made. But on the way down, we took profits. So, I did the best that I could under those circumstances. So CX, yes. Question there, question IYR. Let me just do this real quickly. Then another Bob, sent a note saying, sold 3/4 of my latest Roku call position at 3 something. Okay, good. So IYR was spectacular. Now it's pulling back. You see how we're rotating through these different things? Suddenly financials come on, IBB comes on. Now you have the IYR, which was spectacular for the last many weeks since the low that was made in February. Now suddenly taking a peak D dive to the downside. Well, I shouldn't say dive because the week's young, but a serious pullback after a really good candle last week. Chapman Wave Roman candle on the upside in leg D. Got to watch this closely. The iShares Dow Jones US REITs index trading at 79.99, down 53 cents. In a sell mode in the daily, hasn't yet given me even a signal, a sell signal in the weekly chart. But boy, nice action, and now it's reversed. Now the next thing we can look at is IYT. The transports now with crude oil down, transport should be doing well. Yep, it's gone to a leg D, a real quick D, ABCD, peak D in the daily chart. I got to watch this. This could turn out to be like the Dow, that it just goes higher and higher and higher because the weekly has gone to a peak C and it's held as support. I'm not so sure. I think this is another discrepancy that I was talking about. The reason why I thought the Dow would not break that recent high of 25,402 was because the IYT, the transports were failing. There were failures within that. But you've got enough stocks like a UTX that's holding really well. And we'll see what happens with the IYT. And the XAL should be up because of crude oil. And what is it right now? It is up 2.8 at 105.76. Very nice. Touching tagging in the weekly chart, tagging the 9-period move. No, it broke the 9-period moving average, tagging the 14-period moving average. So within that context, let me get out of that. What happened there? I just don't need this right now. All right, so now we're going to go to Roku. R-A-K-U, Roku. Roku is trading at 50.27, down $1.12. A leg D. Bob knows my technique well. He's taken my courses. So, Bob, you did real nicely. What was the question? Forward. Sold 3/4 of my latest Roku call position at 3.6. Very nice. Yeah. Okay, good. So Roku has a cup formation in the weekly chart. It's in leg D, but underneath its IPO pullback and big gain to the 58.80 high of December 22nd, the week of the 22nd, pulls back to the 30 level. Now it's at 50.22. I like this stock, but I also don't quite understand everything about it. I would think that it could have a bit of a pullback. I think your timing, Bob, is great. It has just enough strength in the MACD and stochastic to maybe have another pop-up, maybe tag 51.5, 52, and then I think it comes in for a bit more of a consolidation. I think this right shoulder in the weekly chart is going to fail, but looking out, the monthly says it could go to a leg B into the 60s sometime maybe later this summer. Yeah, looking good. Good pick. So did that. Boeing. Everybody wants Boeing. Okay, Boeing right now is up 4 at 361. Is this teasing me? Boeing at 361, underneath the 374.48, all-time high of the 7th of June. I've drawn this in. I said it could certainly make a cup formation with a second cup formation like a soft W, but I'm not sure it's going to make an all-time high. In fact, I thought it would not make an all-time high before, and it did. So all I said was, maybe it's going to make the second U-shape formation. I've seen this before, and that can go on. This eventually doesn't break out significantly, this pattern. Very often, it takes out the cup low. I'm watching this very closely, but a good session, no question about it. Okay, here are a couple of things I want you to look at. Remember, this show is supposed to be to explain what we do, and to see if you personally would benefit from the different positions, from the techniques involved. So let me just show you what I've been showing the subscribers every single day. This cup formation with the left side, right side price, Chapman wave price time match with the exact high of 25,402 in the Dow on the 11th of June, coming sharply down to the 23,997 level. Did I put a date? No, on the 28th of June. Let me just put that in here. Since I talk about it, I may as well just get that in. 6/28/18. What I'm looking at here is that we've gone, you remember I had a whole bunch of these left side, right side price time matches. And now what I've done is I've moved it one to the right. Every once in a while, it seems to me to be very unrealistic to have an exact plumb line to the low, because that would have come in to, it could happen still. That would come in till, tomorrow on the 19th. It should try to hit 25,402. If it can pierce the inside wedge, this green line, Chapman wave inside wedge resistance line, which is now at 25,308. So as I'm looking at it now, and it's still only in leg C, and the MACDs are very strong, stochastics getting even better. Now it's at 98.23. You don't get all that much better than 98.23. So that's very good. So yes, now I can say, you know what, I think we might tag that and maybe even go a tad higher. But in the meantime, it's just leg C, and I'll be back in a
A
moment.
Rubik's Cube offers more than 100 million starting positions, resulting in 43 billion potential twists and turns. Yet this puzzle can be solved in 20 moves. Hi, I'm Steve Rhodes, and knowing the right move makes all the difference in the world. And on Thursday, July 19th at 4:15 p.m., I'll share with you the 3 essential tools behind my #1 ranking by Timer Digest for the S&P 500. This 30-minute event is being hosted by Ninja Trader, and it's open to everyone in our listening audience. At this event, I'll share with you the Rhodes Momentum Indicator signal that subscribers now use to identify tops and bottoms, as well as Stevie's red line and the market profiles that I use. The sign-up link is on the homepage of TFNN.com and requires nothing more than your name and email address. To help celebrate my #1 market timing ranking, we're making Mastering Probability available to anyone in our listening audience for the next 30 days with a free money-back guarantee, whether you've subscribed in the past or not. Make your move now by coming to the homepage of TFNN.com and sign up for Thursday's workshop, as well as my free newsletter trial offer.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So I have a good question from Robert. Hi, Basil. I've been using a 1-year chart with an interval of 1 day when charting a stock. I noticed that you use daily, weekly, and monthly when you're charting. Actually, I use daily, weekly, monthly, and 120-minute charts when charting a stock. I noticed that you use, two questions. One, does the daily, weekly, and monthly refer to the intervals? 2, what is the benefit of using all 3 charts? Wouldn't a daily chart provide all the information you need? Thanks for taking my question, Robert. So, Robert, that's a great question. The reason why I've done this ever since I've been here at TFNN, the reason why I've always shown you my moving average, the reason why I've shown you the MACD and the stochastic is, look, here's the dollar. It had a fantastic move up to a peak D at 95.53. We had a whole discussion, peak C1, C2. We don't have to get into that on the daily chart. And that turned out to be a peak D in the weekly chart at 95.53. Then what happens, if you look to the middle chart, the weekly chart, you'll see that the stochastic was failing in the daily chart, which is why I said it's gone to a sell mode in the daily, but the weekly looks great. The weekly chart is saying to me, don't get out of your short position. Out of your long position. This is a strong stock because you've gone from the short interval of daily to the longer interval of looking at weekly. That means 5 or 4 bars per week for 1 bar, 5 dailies for 1. And this looks fabulous. Look, the MACD is still very strong. Stochastics at 82%, very good, not great, but good. Relative strength, the gray line's good. And remember, I said to you, I want to stay long because after a leg 8 to the upside as strong as this, you would expect a big pullback in the monthly chart. And now look, we are within really another, if there can be another point on the upside, maybe even 70 cents in the dollar on the daily to break to a new leg E in the weekly chart, the MACD in the monthly chart is going to cross positive. So this is what I use for the different positions to be able to try to stay in these positions as long as possible. So yes, on the daily, you could do the whole thing on daily. A lot of people just use daily. I want the weekly to say my intermediate term position can go from daily, handing the baton over to the longer term position, and then holding it over to the longest, which is the monthly chart. And that keeps you in positions for much longer. Hope that helps you. And that's the reason why we're still short this estimate at this particular. Okay, have a great day. Stay tuned for Steve. He's got a workshop coming up tomorrow as well.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.